DoorDash results are out. Let's get to those because it's a little bit complicated, and the stock looks like it's up about 14.5%, 15% here in overtime. DoorDash reporting a Q2 beat on the top line and a beat on the profitability metrics that the company guides to. This is important. I spoke to the CFO earlier this afternoon. The company doesn't guide to earnings per share, so that number is going to look like it missed consensus because a couple of one-time items. The guide here is a beat as well. So DoorDash reporting Q2 revenue of $2.63 billion versus $2.54 expected. Loss per share is 58 cents, while analysts were expecting a 9-cent loss. But again, that's GAAP and due to one-time items, including a write-down on office space and a set-aside for legal costs. Now, from operations, contribution profit came in above expectations at $825 million versus $782 expected. Adjusted EBITDA also came in way above expectations at $430 million versus $392 expected. Now, marketplace gross order value beat for Q2 at $19.7 billion versus $19.3 expected. The GOV guide for Q3 is a beat as well, $19.6 billion versus $19.5 expected. And we're going to hear from DoorDash CFO Ravi Inukonda in just a bit right here on Overtime before he speaks to analysts. And Stephanie, I'll go to you first on this one.
Yeah.
Thought the consumer was supposed to be weak, but apparently
they're still eating
on the phone.
They're eating, for sure. GOV beat, and then the guide beat. That's a nice beat, because I think that 19.6 GOV for 3Q, I mean, expectations were for 19.1 on the low end, 19.5 on the high end. So it's a nice number right there. EBITDA, anytime a company beats on EBITDA, you got to cheer for it, right? I mean, profitability, it's all about that. So I want to hear about what their EBITDA guidance is for the third quarter, because that'll be also very important. But so far, it looks great. Stock's only up 8% year to date before this move, so I think certainly can have legs if we get confidence in the guide.
All right, Victoria, I want to get your thoughts on this, especially because it does seem like we're getting much more of a bifurcation where consumer spending is concerned. It's not just from low-end consumers and high-end consumers, but it's really very brand-specific on the retail side, on the restaurant side, and now clearly with DoorDash, even how customers are engaging with these products.
Yeah, and I think it's interesting. It just means your product actually has to stand up and you have to provide value to your customers. I mean, I'm not going to lie. I think I'm part of the reason DoorDash beat. I mean, I had lunch brought in every day this week because I just got busy. And so I look at it and their user interface is great. But most importantly, they're holding off Uber Eats. They're expanding their margin share. They're doing that without having to expand too much capital. So their EBITDA numbers staying strong, because that hookup between Uber and Instacart looked like a big challenge to them, but they're expanding into grocery, they're expanding into, retail shopping for you. They'll go to CVS and pick you up some ibuprofen. And so I look at this and I say, I think they're continuing to expand how people are looking at DoorDash. Their infrastructure and their app is top notch, and the way that they're retaining clients and getting repeat clients and getting them to use DashPass, plus the tie up with Chase offering free DashPass continues to drive even more customers. I love DoorDash's strategy. For me, I think it's a competitive landscape, and they're going to have to continue to innovate and provide value to their customers. But obviously, we're being pretty lazy and we love to eat our food at home in our PJs, watching Netflix the way God intended.